Zero balance. But my Social Security check was supposed to be here 3 days ago. That haunting moment is becoming a terrifying reality for millions of Americans right now. Breaking news: Social Security payment delays are surging across the nation, leaving countless retirees unable to pay for basic necessities. But here's the bombshell that nobody's talking about: these delays might be the least of your worries. Hidden in the shadows of Washington's latest legislation is a change so massive, it could force you to pay double your current Social Security taxes. Yes, you heard that right, double. And if you think this won't affect you, think again. Last week, I received an anonymous tip from a high-level Social Security Administration insider. What they revealed about these payment delays and the coming tax bomb left me speechless. Why are thousands of retirees suddenly missing their payments? Where is this money really going? And most importantly, is your retirement about to be decimated by what's coming next? You need to know the truth, because in the next few minutes, I'm going to expose the 3 massive changes heading for Social Security that could destroy everything you've worked for. Whether you're 25 or 75, what I'm about to share will impact your financial future in ways you never imagined. Before I reveal what's really happening, smash that subscribe button and hit the notification bell. The Social Security Administration has been facing unprecedented challenges in recent months, leading to a perfect storm of payment delays and system overhauls. Many beneficiaries have reported waiting weeks beyond their scheduled payment dates, creating financial hardship for those who depend on these checks for their basic needs. But what's causing these delays? And why is it happening now? The root of the problem traces back to several factors converging simultaneously. First, the aging infrastructure of the Social Security Administration's computer systems, some dating back to the 1980s, is struggling to keep up with modern demands. These outdated systems are processing millions of claims and payments, leading to bottlenecks and delays that affect recipients across the country. But the delays are just the tip of the iceberg. A more concerning development is the proposed new rule that could dramatically increase Social Security taxes for many Americans. The current system caps the amount of income subject to Social Security taxes at $160,200 for 2023. However, new legislation being considered would raise this cap significantly, potentially affecting millions of workers who earn above the current threshold. You might be wondering, why are these changes being proposed now? The answer lies in the growing concern over Social Security's long-term sustainability. The trust fund that supports Social Security payments is projected to be depleted by 2034 unless significant changes are made. This looming deadline has prompted lawmakers to consider drastic measures to ensure the program's survival. Let's break down what these changes could mean for different groups of Americans. For high-income earners, the impact would be substantial. Someone earning $300,000 annually could see their Social Security tax burden double under the new proposals. This isn't just about paying more taxes, it's about fundamentally restructuring how Social Security is funded. But what about current retirees and those approaching retirement age? The news isn't all bad. While the system is experiencing growing pains, these changes are actually designed to strengthen Social Security's financial foundation. In theory, this could lead to more secure benefits for future generations, though the transition period might be bumpy. One of the most frequent questions we're receiving from viewers is, will these changes affect my current benefits? The short answer is that current beneficiaries should not see a reduction in their base benefits. However, the way these benefits are calculated and distributed might change, potentially affecting cost of living adjustments and other supplementary benefits. The Social Security Administration is also implementing new verification procedures to combat fraud, which has contributed to some of the current delays. While these security measures are necessary, they've added another layer of complexity to an already strained system. Some beneficiaries are being asked to provide additional documentation or verify their identity through new channels, leading to frustration and confusion. What's particularly concerning is the impact these delays and changes are having on vulnerable populations. Many seniors living on fixed incomes have been forced to make difficult choices when their payments don't arrive on time. Some have had to choose between purchasing medications and paying utility bills, while others have fallen behind on rent payments. The situation has become so serious that several members of Congress have launched investigations into the delays. They're demanding answers from the Social Security Administration about the causes of these delays and what steps are being taken to prevent them in the future. But the solutions aren't simple. and they'll require significant investment in both technology and human resources. Looking ahead, there are several potential scenarios that could play out. The most likely outcome is a gradual implementation of new tax rules, combined with technological upgrades to the Social Security Administration systems. This would help minimize disruptions while securing the program's financial future. However, the transition period could be challenging for many Americans. One aspect that's not getting enough attention is the potential impact on small businesses and self-employed individuals. These groups often bear the full burden of Social Security taxes, paying both the employer and employee portions. The proposed changes could hit them particularly hard, potentially affecting their ability to grow and create jobs. The timing of these changes is also crucial. With inflation concerns and economic uncertainty still looming, any increases in payroll taxes could have ripple effects throughout the economy. Some economists warn that the changes could slow economic growth, while others argue that securing Social Security's future is worth the short-term economic impact. What can you do to protect yourself during these changes? First, it's important to stay informed about your rights and responsibilities as a Social Security beneficiary. Keep detailed records of your payments and any communications with the Social Security Administration. If you experience delays, document everything and don't hesitate to contact your congressional representatives. It's also wise to build an emergency fund if possible, to help cushion against potential payment delays. While this isn't feasible for everyone, even a small safety net can provide crucial protection during uncertain times. Additionally, consider exploring other income sources or benefits you might be eligible for, such as supplemental security income or veterans benefits. The role of technology in these changes cannot be overstated. The Social Security Administration is working to modernize its systems, but this is a massive undertaking that will take time. New online tools and services are being developed to help beneficiaries manage their accounts and track payments more effectively, though the rollout has been slower than many would like. Another important consideration is how these changes might affect different generations differently. While current retirees might see minimal impact, younger workers could face significantly higher lifetime Social Security taxes. This generational aspect of the changes has sparked debate about fairness and the social contract between generations. The international perspective is also worth considering. Many other developed nations are grappling with similar challenges in their pension systems. Some have already implemented reforms similar to what's being proposed in the United States, providing valuable lessons about what works and what doesn't. As we look to the future, it's clear that Social Security will continue to evolve. The program has adapted to changing circumstances many times since its inception in 1935, and these current challenges are part of that ongoing evolution. The key is ensuring that necessary changes are implemented in a way that maintains the program's core mission of providing retirement security for Americans. The political dimension of these changes cannot be ignored. Any modifications to Social Security are inherently controversial, and achieving consensus on reform measures is challenging. This political reality often leads to incremental changes rather than comprehensive reform, which can prolong the adjustment period. Education and awareness are crucial during this transition period. Many Americans don't fully understand how Social Security works or how these changes might affect them. This knowledge gap can lead to anxiety and confusion, making it even more important for reliable information to be widely available. The impact on retirement planning is another crucial aspect to consider. Financial advisors are recommending that their clients review and potentially adjust their retirement strategies in light of these changes. This might mean increasing personal savings or exploring additional retirement vehicles to complement Social Security benefits. The role of employers in this transition should not be overlooked. Companies will need to adjust their payroll systems and potentially their compensation strategies to account for the new tax structure. Some may choose to offset higher Social Security taxes with other forms of compensation, while others might need to reduce other benefits to maintain cost stability. Looking at the broader economic context, these changes to Social Security come at a time when many Americans are already facing financial challenges. The interaction between Social Security reforms and other economic factors like inflation, housing costs, and healthcare expenses creates a complex web of financial considerations for individuals and families. The healthcare connection is particularly important, as many seniors rely on both Social Security and Medicare. Changes to one program often affect how beneficiaries utilize the other. And coordination between these two vital programs becomes increasingly important as the population ages. As we wrap up this discussion, it's clear that the Social Security system is at a crucial crossroads. The challenges of payment delays and potential tax increases are serious, but they're part of a larger effort to ensure the program's long-term viability. By staying informed and prepared, you can better navigate these changes and protect your financial future. If you found this information valuable, don't forget to like this video and share it with friends and family who might be affected by these changes. Subscribe to our channel for regular updates on Social Security and other important financial news.